Today we're going to talk about really the wealth gap, home ownership versus renting. Which one's better? And which one maybe I might want to stay away from? Today we're going to talk a lot about two brothers, same income, same city, same 30 years that they had to work with, but two different outcomes. One is worth 40 times more than the other. So let's get into it. And while I'm here, I want you guys to subscribe for any tips that you feel you don't want to miss regarding home ownership and wealth building. Before I share the number with you about how one was worth 40 times more, 40% actually, than the other, really, again, it's more of a mentality shift. One brother, and I see it a lot in minority communities, where they think buying a home is kind of a bad thing, where they'd rather rent because they don't want to take on 30 years of debt and paying somebody else, right? They don't want to have that level of commitment of debt. And so they just opt out. And so in my client's case, there were, we had two brothers. One, I had consulted them both. One was ready to buy, one wasn't. Fast forward, we're not 30 years in, but close to it, they're earning appreciation. And so let me share with you a little bit about the how, right? Statistically speaking, homeowners are on average worth $396,000 more than the average renter. The average renter is only worth $10,400. And you're like, Victoria, how does that happen? Or how do I take part in that, right? Again, same income, same line of work, same city, and they're brothers. Same family, right? Same ingredients, but very, very different paths. And so what I kind of want to share with you is, how do you know when you're ready for home ownership and when renting's genuinely okay, right? So in this scenario, brother A said, I don't want to rent. I want to have a piece of home ownership. I want to own something. I'm working really, really hard. And you know what? I want a piece of land that I can then construct. I can do whatever I want with. And then we had brother B. Brother B said, well, I want my rent and I want to pay as little as possible. And my parents always told me that debt was bad. And like I said, I see it in a lot of minority communities. We don't talk about money enough. We always focus on either one of two things, either saving our money or spending our money. But nobody ever teaches us about investing our money. And sometimes we're brought up with the programming of this limiting belief that debt is bad, when the actual reality is there are certain things like good debt and bad debt, and real estate is a good debt purchase. And so sure enough, fast forward, brother A buys a home, starts building equity appreciation, and out of that money, that $396,000, half of that is equity, and the other half is what he actually is paying into every month, because every month that payment goes towards his piggy bank, versus his brother B, who rented. Guess what? The landlord increased the rent. It's not a fixed payment. He's paying for the landlord's equity as opposed to his own. And guess what? He's only worth the $10,000. So we work so hard, again, doesn't matter about the work ethic. We work so hard that, again, what is our retirement plan? What is our legacy? How do we really build wealth? And that's where real estate and home ownership happens. Now, on the flip side, Victoria, maybe I'm not ready for owning a home because I don't want to deal with the maintenance of owning a home. I don't want to deal with the responsibility. Totally fair. How do you know that you're ready to stay renting? Well, there are some cases where maybe you just can't afford it, and that's okay too. There are some clients that I do talk to where they want a low rent and that's what they can afford, and they don't want to move because maybe the area where they're living at right now, it's too expensive to buy. And so it's too expensive to have a payment. But guess what? They don't want to leave the luxury of where they're living. They like the commute. It's close to their work. They like the stores, the area, the community that surrounds them. In that case, guys, it's perfectly okay to rent. Sometimes homeownership comes with a sacrifice if we can't afford it. And if it does come with a sacrifice, sometimes it's sacrificing the type of home that you want to buy. So maybe we're not starting with a home. Maybe we're starting with a condo or a townhome because we want to stay in the community. Or sometimes it's distance that we sacrifice. We want to go further out so that way we can go ahead and get the home. And so we have to leave our communities, make that sacrifice. And who's to say you have to stay there? On average, everyone, home buyers and homeowners only stay in their home for 5 to 7 years. So the reality is I've even had cases where clients will buy further out, stay there for 2-3 years, and end up going on ahead and buying back, selling their home, and coming back to the community that they once wanted to be in. And so with that, I just want to share with you guys, there are options. And sometimes if you're not ready for homeownership, that's okay too. It's something you can strive for. So I'm going to leave you with some practice tips. Some things that I did when I was first trying to explore the option of whether I was ready to rent or buy or upgrade to a new home, right? So some of us are sitting on some pretty low payments and we want to do the upgrade because maybe life happens, but we're a little scared to. So one thing that I used was this financial hack. I went on ahead and my mortgage payment was $2,500. I was going to a higher payment. And so what I did was I actually ended up practicing that payment. And I recommend this to all my clients too. Practice the payment. If you're going from a $2,500 payment to, let's say, a $5,200 payment, open up a separate savings account. Start paying your rent, that $2,500, and let's say that extra $2,500 or $2,700 you put into a savings account. So you can truly see, number one, am I ready to make the jump from renter to homeowner? Number two, am I ready to make the financial sacrifices and discipline in my lifestyle? Do I have to let go of the Starbucks? Do I have to stop eating out to where I can go ahead and afford the payment? Or maybe I'm more ready than I think. I've just been sitting in my comfort with my payment that I've just been frivolously spending all this money everywhere else, right? And so I just really want to encourage you guys, utilize these tips. They are going to be helpful in your homeownership journey. And for those of you that choose homeownership over renting or renting over homeownership, there's definitely a path for both options. With that, stay tuned for our next video where we talk a little bit more about continuous wealth building and other strategies of even house hacking. If you want more tips on how to build generational wealth, real estate, and wealth planning, and just maybe some hacks that'll help you in the future, make sure you hit that like and subscribe button so you don't miss out.